Good morning, good morning, good morning. It is Tuesday, the 23rd of September, all day. You join myself and Mr. Michael Brown for the Morning Blast, where we will be giving you a review of yesterday's news and price action, etc., and a preview of today's news. I wish we could give you a preview of today's price action, because if we could, we'd all be millionaires. But before I do, I will crack on with the legals as usual. Nothing discussed on this podcast is trading advice or if there's any kind of endorsements with anyone other than ourselves. And that goes for PIQ, myself, and Mr. Brown. Mr. Brown, how are you? I cannot hear you. Are you talking? Nope. Mr. Brown seems to be having some technical issues. He's just declined the co-host. 1 second. Let me see if I can add him back. He might, if he can hear me, have to leave and come back. Unless he pushed the wrong button by accident. Come on down, Mr. Brown. I gotta say, Spaces is getting worse and worse.
Hello.
Oh, here he is.
No,
Hello.
it's not space. That was actually purely user error.
Oh, no. Well,
Yes.
to be honest, I'm happy to blame Spaces because I hate to break it to you, but tomorrow we might be trying to do it on something other than Spaces and then just post it onto Twitter because the support for Spaces is getting worse and worse and worse. And yeah, we're trying to make it more podcast friendly.
Oh, God, you'll have to get Tom Talks Cast to come around and hold my hand to show me how the technology works.
Oh, your hand. Oh, okay. Sorry. Right.
Tom will be pleased that there is a supply of chocolate bars in this office. So.
And Chris. Right. What's been occurring, my dear friend?
Yes, indeed. Well, very good morning to everyone. Slightly belated. Apologies for that. In terms of financial markets, very much a case of more of the same yesterday. The risk rally rolling on. The S&P up by about 0.5%. The Nasdaq up by about 0.5% as well. Both trading to new record highs to start the new trading week. And one interesting little tidbit from markets yesterday. Ooh. The entirety of the Magnificent Seven are now trading in the green year to date. And that is the first time that all 7 of those names have been in positive territory this year.
And people are bearish. People are bearish.
Well, quite. Apple have obviously lagged the pack significantly. They clambered their way into positive territory on the year yesterday after reports of better than expected demand for the iPhone 17. So there we are. The Magnificent Seven are magnificent once more. There is no stopping the equity market at this moment. It would
all lubed
seem
up to go higher.
Oh, God. Speaking of which, gold... No, going higher.
Right.
Gold continues to gain ground. The yellow metal notching more all-time highs yesterday, up by about 1.5% to $3,750 an ounce. Little challenge to anyone who's read my morning note this morning. See how many references or lyrics of that song you can find in the opening 3 paragraphs.
I've
very pleased.
I've reposted it, but I'll be very honest. I've been far too busy this morning to give it a read. I dread to think.
I was jumping away to myself at 5 a.m. So yes, gold continuing to gain ground. The dollar rolling over just a little bit yesterday. The recent rebound running out of steam, allowing cable to reclaim 135, the euro to reclaim the 118 mark overnight, and treasuries again softer across a steeper curve. Frankly, fundamental developments were a little bit thin on the ground as the new trading week got underway. We didn't really have any notable economic data releases throughout the day yesterday, although this morning we have had softer than expected PMI data out of France. I say softer than expected, it shouldn't really be surprising given the political turmoil that we had in France earlier this month. We have had some better than expected PMI figures out of Germany just as we started this broadcast, and we've also had a surprise rate cut from the Riksbank in Sweden, who lowered rates by 25 basis points to 1.75%, but have indicated that rates will now remain at this level for, quote, some time to come. In terms of other news flow from yesterday, a heavy focus on the Fed as the FOMC's blackout period came to a close. We had 5 Fed speakers yesterday. relatively hawkish remarks from a fair few of the regional presidents, including Atlanta Fed President Bostic, who noted that inflation makes him hesitant to declare support for an October cut right now. That doesn't really matter because he doesn't vote until 2027. St. Louis Fed President Alberto Muslin was saying that more rate cuts will be conditioned on further weakness in the labour market and that there is limited room for further rate reductions, although, of course, Muslin has been relatively hawkish for some time now. Beth Hancock, a 2026 voter, Cleveland Fed president, talking about how the US is a two-speed economy. 2027 voter Barkin was saying that some uncertainty is beginning to clear. And then we heard from Coco the Clown. Sorry, Fed Governor Steve Moran.
Whoa. That's my boy. That's my boy you're talking about. Just because he unfollowed you, don't tar him with any bad brushes.
I don't want him. I'm very selective about who follows me
mate.
these
All
days.
right.
Steve Moran was as dovish as one would expect, noting that the appropriate Fed funds rate is between 2 and 2.5%. Of course, for those who are unaware, we're currently between 4 and 4.25%. He also said,
right.
of course you fucking do. He also said that current rates are, quote, very restrictive. Multiple Trump administration policies are lowering the neutral rate, and he believes that the R star, which is the real rate, neutral rate of interest, is, quote, close to zero. He published a whole host of academic papers and assumptions and equations to go along with this speech, which actually, you probably don't expect me to say this, I kind of rate that. I actually think that's a good move. I wouldn't mind a little bit more transparency from Fed members in terms of how they're thinking, the logic and the assumptions that they're using in their calculations.
You two-faced bastard. Because
the only problem is
you were taking the piss out of all of his kind of working outs yesterday with your Charlie from Always Sunny meme.
I haven't finished yet because I was going to say the only problem is all of his assumptions are complete and utter bullshit.
Well,
if they were actually grounded in fact, then I would be a little bit of a bigger fan. But yes, anyway, we'll probably hear from him again in a couple of days' time doing Trump's bidding on the media. Sticking with the Fed, Treasury Secretary Bessent was talking yesterday saying that he's going to interview between 10 and 11 candidates for Fed chair and that those interviews will conclude by the end of next week. He's going to be doing 2 more interviews this week and then we'll begin to narrow the field by the end of next week. So potential. Well, invite's still in the post, I believe.
Okay.
I'm waiting by the phone, just eager. Scott, if you need me, I'll give you my number. Bessent was, so we might get some news on the Fed chair towards the back end of next week, potentially. Bessent also effectively ruled himself out of contention, saying that he likes where he is in terms of being Treasury Secretary. Away from that, on the issue of trade, JP Morgan CEO Jamie Dimon was talking yesterday. He said that tariffs could be modestly inflationary, but it's uncertain if the impact is temporary. Thanks for that one, mate. You're stating the obvious a bit with that. We also had news on TikTok yesterday. Of course, this US-China deal around the US arm of TikTok. Apparently, Oracle, of course, they've been absolutely flying recently. They are going to essentially rebuild the TikTok algorithm, but a US version of it, and then they are going to secure it on their platform somehow. The net effect of this is that the TikTok deal deadline, which was extended by 90 days last week, has been extended by another 20 days because Oracle need more time to actually build all of this stuff out. So we will see how that one develops. Sticking with the tech sector, OpenAI and Nvidia, they have announced a, quote, strategic partnership to deploy 10 gigawatts of Nvidia systems. Basically, the way this will work, I'm not even going to bother reading the rest of the press release. Nvidia are going to invest $100 billion in OpenAI.
And what are Nvidia, sorry, what's OpenAI going to do with that 100 billion, Michael?
Well, I was going to say OpenAI are then going to go and build a whole load of new data centers. And of course, a lot of the infrastructure in those data centers comes from Nvidia. So it is all a little bit of a, I'm not going to use the
jerk.
Yeah, that's one way to put it. There was a very good graphic.
I'm here for the technical terms.
There was a good graphic doing the rounds the other day. I think it was Bank of America put it out, which was along the lines of who builds a data center. And all the stocks and all the various parts, the air conditioning, the networking, even things down to the electrical cables that run through it. And Tom Talkscast is laughing at me now. But it was a very good graphic. If anyone does have that, it's worth a look because there's way more companies involved in this sort of AI arms race than just Nvidia and Broadcom, which we kind of always reach for. Moving on to politics, the White House, they have said that some doctors may be exempt from these fees associated with H-1B visas. Of course, we spoke about this yesterday, the 100 grand that's now going to have to accompany those visas, and how the tech sector have been sort of up in arms about that one. It appears that the White House may have bitten off a little bit more than they can chew. It's gone from an annual fee to a one-off fee, and now certain sectors are being exempted. It looks like this is going to disappear quite quickly. Also on the political front, I don't even want to mention this, but the words government shutdown are on the news agenda once again.
Drink.
Yeah, exactly. Just if anyone is buying or selling anything based on these headlines around the government shutdown, then give your head a wobble. We all know how this pans out eventually. Even if there is a shutdown, there's a deal to kick the can down the road to reopen things within a couple of weeks. So, it is what it is. But nonetheless, the White House have said that, Punchbowl News have said that President Trump will meet with House Minority Leader Jeffries and Senate Minority Leader Chuck Schumer at some point this week. That obviously won't take place today because President Trump is in New York for the UN General Assembly, but at some point this week that may happen. And a couple of last things from me. One, Alibaba, obviously the Chinese conglomerate, for want of a better word, they are targeting brands who are currently selling on Amazon and are trying to offer them lower fees to draw them to their e-commerce platform, which is AliExpress. Interestingly, not just in China, but they're trying to do that across the globe. And lastly, Belgian bank KBC, they are apparently looking at a potential acquisition of ABN AMRO. Where on earth is Fred Goodwin when you need him these days?
Oh, exactly that. Well, Michael, thank you very much for that. Just before we push on, though, just an update from our dear friend Clive Lambert, technical analyst to the stars. He just messaged me to point out that silver is also at its 14-year high, which is the all-time high is 49.82 from April 2011. So there you go, Clive. I hope you're happy now. And also, before I move on, just before we came on air, we had some French data, and you can tell why I want to read it out, because it's fucking awful. French economic activity declined in September and its fastest pace since April. And manufacturing is completely in the carsy because it's now been subdued. It's had a 16-month consecutive fall in new orders. So,
obviously,
anyway,
we are, inconsolable with.
Mate, I don't know what I'm going to do with myself. Well, I can't do, but that's not for this show.
Moving on.
So anyway, a roundup of the highlights from Zach's always awesome overnight news roundup. Do follow Zach for that, and also do subscribe to the Substack, etc. Starting off with macro news. Pardon me. Trump and Democrats face shutdown showdown. President Trump will meet top Democratic leaders, as Michael and myself have just been mentioned before. There's a lot that you'll see the usual talking heads kind of say, "Oh my God, they're going to be a shutdown," but we probably won't. Very unlikely. Where we got, so Jeffries and Schumer, they're meeting on Thursday to discuss government funding ahead of the September 30th deadline. The meeting comes as a visiting US congressional delegation reported that the dispute with Beijing's rare earth controls remains unresolved, signaling persistent bilateral tensions. The AI funding gap threatens tech revolution, apparently. The AI companies will need 2 trillion, that's with a T, in combined annual revenue by 2030 to fund computing power, but are likely to fall short by about 800 billion. That's according to Bain & Co. Incremental AI computing requirements could soar to 200 gigawatts by 2030, with US accounting for half of that. Supply chain constraints or insufficient power supply could thwart progress. I think we all know it will thwart progress. Bitcoin options show extreme positioning, with biggest wages below 95,000 and above 140,000 for the month-end expiry. That's according to Bloomberg.
I don't even know why I'm going to ask this. Maybe if there's a crypto blast, Cam can answer this question later on. Where are Bitcoin options coming from? Are they options on the futures that trade? Are they an OTC thing? Because I see this banded around all the time, and I've always kind of gone, well, what is it? Obviously, I know what an option is. You don't need to go down to that level.
Right, so there's a thing called a call and a thing called a put. But that's a very good question, and I look forward to Cam's response on X.
Off you go, Cam. Go and do your homework.
Chop. Japan's leadership candidates outline fiscal plans. LDP frontrunner said Japan will need excess tax revenue to fight rising consumer prices, but issuing government bonds, quote, could become unavoidable if the situation calls for it, unquote. His rival, or her rival, pledged to use expected tax revenue increases and expenditure cuts to fund cost of living measures while maintaining fiscal discipline. Both frontrunners emphasised solid economic growth as the basis for sound fiscal policy. Easy to say, less easy to do. Moving over to China, China signals policy flexibility amid trade tensions. China may have scope to lower loan rates before year end to stimulate domestic demand. This follows the Fed cuts that eased yuan pressure, though bank margin constraints limits room. China's top court, they reinforced that employer-worker workarounds to evade social insurance contributions, are invalid. This threatening jobs while funding depleted pension plans. Sticking with China, China's buyers booked at least 10 Argentinian soybean cargoes, taking advantage of low prices amid US trade tensions. This seems to be an ongoing theme. Definitely tune in for the grain market blast, which is every day at 2:45 for updates on that from the marvellous Angie. Moving over to Europe, European challenges mount. Euro GBP is extending upward momentum towards July peaks with big option turnover, signalling fresh bullish euro flows weeks ahead of the UK's autumn budget. European natural gas, just anecdotally on this, personally, I know quite a few people that have bought or are buying, Londoners this is, or UK-based people that are buying property in Europe and also moving cash into Europe. So this kind of ties in with that, I guess.
Mm-hmm.
European nat gas options predict prices could hit €50 next summer, implying a 60% jump from its current €32 levels. And the EU is discussing postponing deforestation import bans for a second time after US trading partner pressure. Global policy shifts now. UK. I wish she was in the US. UK Chancellor Reid could raise $6 billion in income tax by targeting pensioners, landlords, and self-employed rather than employees. Tax is not the way forward, but also, as Michael will attest, this comes from the Resolution Foundation, which will literally offer tax increases as a solution to every problem you have. Moving to our antipodes, New Zealand is set to name Sarah Breeden, a Bank of England deputy governor, as its first foreign central bank head. And
I didn't know that.
Yeah, apparently. Hong Kong, meanwhile, they're being battered by super typhoon Ragasa, one of the strongest storms in years, suspending flights until Thursday. One to keep an eye on there. Geopolitical news, Australian critical minerals migration. Some of Australia's most advanced critical mineral producers are moving forward with US processing facilities despite Australia's strategic push to build a domestic industry. This signals shifting supply chain dynamics and geopolitical tensions. And finally, before I head back to Michael, a couple of equity names. Obviously, we've gone through the Nvidia circle jerk with OpenAI. TSMC Arizona gains major clients. Apple and MediaTek both plan to have TSMC Arizona manufacture their latest 5G smartphone chips. The timing depends on TSMC's Arizona readiness, etc. Oracle is seeking new Taiwanese AI server partners to help with a $455 billion in remaining performance obligations, adding Quanta and WeWin to its Foxconn and Mitac suppliers. Mixed corporate signals. Trump warned that Tylenol's active ingredient, which I'm not going to pronounce because I can barely pronounce normal words, let alone this word, is a potential autism cause, while touting some other thing, leucovorin. I'm butchering that, but as a treatment option. So whoever's making that, I guess, buy shares there. Disney returned Jimmy Kimmel to late night TV after a 6-day suspension after controversial comments. And Boeing received an order for $8 billion from Uzbekistan Airways following Trump's conversation with the country's president. Unfortunate post from Trump on this. He posted that the Uzbekistanis were buying, I think it was 22,787 or whatever it was.
Oh no,
planes.
The plane's called 787,
but there's planes called 787. He forgot the gap between the 22 and the model number. So there's a few questions being raised last night on Truth Social.
I mean, are there 22,000
no
planes in the world?
Well, there's definitely not that many 787.
No, that's what I mean.
And it would also cost a lot more than $8 billion. US lawmakers in Beijing raised a potential deal
Diane
for
Abbott
China.
School of Maths going
Yeah,
on there.
exactly. Lawmakers in Beijing raised a potential deal for China to buy more Boeing jets. And finally, before I head back to you, because I've been taking a bit of time here, European M&A activity. Monte de Paschi gained control of 86.3% of rival Mediobanca in a deal valuing the bank at around $19 billion. Heineken is buying Costa Rican beverage and retail businesses for $3.2 billion to expand Central American presence. And Botswana presence aims to complete a majority stake deal in De Beers by month end. And that's it from me. Back to you, the big man in the studio.
Very good. Thank you, Ryan. In terms of today then, we do have a few bits and bobs on the data docket, mainly flash PMI figures for September, of course. At the top of the hour, in about 10 minutes' time, we get data out of the Eurozone. Of course, the regional prints we've had this morning have been a little bit mixed. In any case, consensus sees the composite output metric for the Eurozone rising marginally to 51.1, up for a prior 51. And then at 9:30 this morning, we get the flash PMI figures out of the UK, with a composite output metric that is seen falling a touch to 53, down for a prior 53.5. And then we'll get the US data at 2:45 this afternoon. Of course, that comes ahead of the more widely watched and, well, what I prefer to look at, which is the ISM, US ISM PMI surveys, which we get towards the middle of next week. Away from that, other things to focus on in terms of the docket for the day ahead. We have manufacturing figures from the Richmond Fed. They are due at 3 o'clock this afternoon, although they have been crossing a couple of minutes early in recent months. That index is expected at -5 compared to a prior -7. We've also got this week's Treasury supply kicking off this afternoon with a 2-year note auction, $69 billion worth, being sold off at 6 o'clock this evening. In terms of central bank speakers, undoubtedly the highlight is going to be Fed Chair Powell. He makes remarks at 5:30 this evening, London time. There will be a text release. There will also be a Q&A from those remarks from Chair Powell, although I would largely expect him to reiterate what he said at the press conference last week. We may potentially get some clearing up of the language around this idea of a risk management cut, which felt a little bit clunky when he tried to deliver that line last week. Also due to hear from the Fed's Bowman, Bostic and Goolsby as we move through the day ahead. The ECB's Cipollone, Kocher and Muller, as well as the BOE chief economist Hugh Pill. And last but by no means least, notable earnings today come from Micron after the close. And actually that's not last, because the other thing I need to mention is we are probably going to be getting quite a few comments from the Trump administration throughout the day. Trump is addressing the UN General Assembly at about 3 o'clock this afternoon, London time, I believe. There's also going to be various sort of leader-level meetings on the sidelines of that as well. So certainly something to keep an eye on in terms of headlines throughout the day. But for the time being, that is all from me.
Wonderful. Well, Mr. Michael Brown, thank you so much as always. Listeners, as always, thank you so much for tuning in. We really do appreciate you. Again, forewarning, because we might be trying a different way of recording these tomorrow. So bear with me, because it is me and Michael doing this. So get your crayons out and we'll see what happens. But yeah, that's it from us. Whatever you're doing today, keep it tight, stay safe, and we'll see you all tomorrow, I hope. See you later.
Bye for now.
Ciao for now.